right, so before we get started, I do want to thank everyone for their emails. Everyone who did send in one, you are officially on the priority list. So if you missed Tuesday's session, I will be posting that information about my upcoming venture on the social media sites. And of course, you can always email me at tradingwithjasmine@gmail.com. And of course, we'll put you on the priority list. Okay, great. So we're all good on sound and everything? Just checking. All right. So before we actually get started on today's topic for our current market focus, I thought we'd do a little bit of just talk around the overall conditions. So we went through this partly before, where so the question, of course, comes to mind of do most traders make money or lose money? Yeah, just about the new venture. So if you want to email me at tradingwithjasmine@gmail.com, you'll get put on the priority list. And when the new venture comes out, you get the first look of it. So like I said, thanks for everyone who's been doing that. It's been great. All right. So again, so the question is, do most traders make money or lose money? Same with long-term investors. All right. Why do long-term investors never achieve their financial goals? Right? How about this, even a better question than all that? Who consistently makes money? Who makes money year after year? Right? Yeah, who is it? Right. Banks and institutions, right? Wall Street. Yeah, exactly. So that is the purpose of my sessions with you. I want you to stop thinking and acting like a novice, trader or investor, and start thinking and acting like a pro. Does that sound good? We all in for that? You know, when I first started, it was just like that. Although I didn't know I was a novice. I thought, you know, I learned a couple of indicators. You know, you think about indicators, why are they free on your platform? If the indicators were so great, why does every platform that you sign up for, whether you pay for the platform or you get a free platform, you get a whole bunch of free indicators that come with it? If something was so great, why would it be free for you, for the whole world? You gotta wonder about that. But, you know, when you first get started, you figure, hey, this is what, yeah, I'm really learning something here. And sometimes what people do is they make things so complicated that you're believing you're buying something good because they made it so complicated, and you have what should be 2 or 3 steps turn into 8 or 9 steps just to try to find the trade. And then you have the problem with the, you know, oh, this is not a confluence because this is moving in one direction, that's moving in another direction. Well, my RSI is saying this, but my trend indicator is saying that. And so, I don't know what I'm doing. So that's the purpose of what we're going to do today, is really start thinking and acting like a pro with all the sessions, but let's focus on today. But having said that, did anybody listen to Goldman Sachs yesterday? Anybody just have a little idea of what they even said yesterday? And we will go into that. Just get that for you. All right. So you can see here on Goldman Sachs, look at where they call the buy, right? Analysts see buying opportunities. This is in Tesla. Look at where they exactly call the buy there. Now, go back and take a look down at the lows. Goldman Sachs cuts Tesla price target. Downward path for shares will resume. And there you go. They're basically calling a sell there. Right? Upgrade up at the highs, where you see the circle, and a downgrade down where you can see where we did the sells. Now, take a look at, yesterday, we know that a lot of the banks got hit yesterday, right? Take a look at the one that's the only green one. And I found that interesting at the end of the day, because I was like, wow, they're actually in the green. Everybody else is taking a hit, but they're actually in the green. So then it got me thinking, okay, they're calling the buys and sells here. But where are they really buying for themselves and selling for themselves? Right? I mean, look at the difference. Look at where the sell is called for and where the buy is called for. I mean, the difference in price of the stock, and now they're also the only bank in the green. So it really makes you wonder about all this. So you can see, are you buying and selling like a professional, or buying and selling when they tell you to? Right? Big difference. Big difference. Right? Two simple reasons Wall Street makes so much money and the average trader and the investor doesn't. And I go back to the same thing as before, where in the beginning I'm taught, yeah, well, here you go. After these, a lot of confirmation, a lot of green candles, you be the buyer. A lot of red candles, you be the seller, right? And the same thing if you're following trend to a T too, right? Oh, let's wait for this. I got to see this trend before I start to do anything. And when you do that, then that's the complete opposite of what we're trying to do. You'll never get the perfect supply and demand entry when you are following a course like that. And you can see right here too. Oh, there's a three up days. Let's try to buy it. There's a couple of down days. Let's try to sell it. So be careful what they tell you. You have to think for yourself, and that's exactly what we want to do here, and that's what we will continue to do here inside of our sessions. All right, let's move on to today. Okay, so for today, so we've had interesting couple of weeks here in YouTube where we focused on, well, is good news, is good news bad news? Is bad news good news? And you can see too in up markets, bad news is good news, and down markets, we have the reverse. But for the last couple of weeks, it's been, we had some good news, but we know we're coming into a supply zone. We had some bad news, but we know we're coming into a demand zone. When I come into today, and we will definitely take a look at where we are today, but what I've noticed this morning was this is a good day to turn off the news. And you may say, well, why are you saying that? Because there's so much that's still floating around all the way out there. When I listened today, it looked to me like just mass confusion everywhere. They're saying, oh, this part is going to open up, and then they're saying Japan's calling a state of emergency. Oh, but parts of the U.S. wants to open up. But then the UK may start to open up. But then Portugal's having the most things ever, and I'm like, I don't even think anybody knows what's really going on. And then let alone, then they're saying one thing about, well, Trump's going to make this speech a little bit later, but then they're saying, well, people don't want to go back unless there's more testing. So does anybody really know what's going on? So I look at today like it's a good day just to say no to the news, because it is not helping you out one bit whatsoever. You can just listen to it to keep yourself amused for the day, but anything else besides that, there look like just as much in the darkness as everyone else. So we will keep that in mind for today. Also, what we talked about in our previous session was the dollar in relation to the credit market. And sure enough, after the session, there goes Jamie Dimon and all talking about it, and did take the bank stocks into some issues, and then the dollar turning. And I did see some questions that did go unaddressed yesterday, so we will definitely look at that too as well coming into today. All right, so now let us get into the charts. All right, so more or less coming into this morning, there has been, like I said, a lot of good news early on, then started getting into mixed news. And so I'm not really paying attention to news today, but what I am doing with it overall in general is saying where we are in the whole picture and scheme of things. So let's go in and take a look at it. So let's start with our S&P 500. You can see now we were up pretty high overnight. We did make an overnight high so far of 2806.25. The overnight low is actually below yesterday's low. That's coming in at 2746. So you can see there is some overnight area. What I'm seeing with this though, with everything is if we're still sitting at 2777, number one, it looks like we're not really going to have much of a gap. We're pretty much opening. If we stay here, we could fall. There's still over another hour. So we could fall more or we could rally more. It could be either way. But it's kind of telling me this is exactly where we're at, which is right. So we gapped up yesterday. And then you can see this is where we're at. So even with everything that's been happening, good and bad news, we're just kind of stuck right here. All right. So just to give you a perspective of where things are. We're still kind of holding the highs at the moment. You can see we've been in a little bit of an up move, but overall we have stopped into this overall area at the current moment. So now let's go take a look. So we can see here, we do have above the overnight high. Now, remember, for those of you that need the session guide, go back to look at one of the previous sessions, and you'll see that right up above current price, we do have an overnight on a 5-minute level That is coming in at the 28.1050 to the 28.1650. Below, oops, let me go back. Below the overnight low, you have these 5-minute levels. That's coming in at 26.8775. And you can see it takes it all the way down to 26.66. Then a little bit, if we get further into the 5-minute, it does go down. These are nice, two nice levels on top of each other. That's coming at 26.10. Do like these a little bit better structurally a little bit, but the upper ones, what I like about the upper ones, it is right below the overnight low. Because remember, a lot of times what happens is once prices start to move below the overnight low, you know, all these, you know, people are telling you, well, sell, you know, because we have some weakness coming in, so sell. But meanwhile, you're coming into some sort of demand. Same thing above the overnight high, you know, they're telling you to, okay, that's a good time to sell, and you're coming into some sort of supply. Now, the only difference with this one is it is overnight, so it is less, not as high quality as a daytime session, just because that does mean it's light volume. It is more European time, so it still has some sort of merit, but not quite as good on the volume side as, of course, the U.S. sessions. Let me just see something else on here. Okay. Okay. All right, so that is on the S&P. We still have our upper zones. Don't forget. I'll take you to the 60-minute, just in case. So you can see on the 60-minute. So as we start getting back up into its daily 50 and 200, you can see that we have those couple of levels on top of each other here, where we've gone through this before in the 60-minute, but you can see with the first one, let me open it up and pull it back for you. Okay, so you can see right here, right above the gap. So once you start moving up into the 3000s, you are going to start to get some congestion going on with some sellers coming in. And you can see all around. This first area you can see has been tested right above the gap here. And you can see that starts at 29.73. And then the two fresher zones is coming in at the 30.18 up to the 30.85. So once you start heading up towards this this area, this you can see where the 50 MA comes in. It really is not a great area of supply, as you can see. But up above, as you get into the 200, you will see quite a bit as we move up, if we get up to those highs. All right. On the SPY. So on the SPY also, that's going to be coming in line with this overall area with those three zones. That will be in the 300s, about the 300 to the 309. And then down below, the fresher zones of demand, the first one will be coming in at this 260.27 to 257. One thing I do want to say with today too is you want to pay attention to some of the sectors too as well. So if you are trading some of these, a few of the sectors that you want to look into that may affect some of it, like the financials or the technology. because I can see that. So if we move into the Nasdaq, all right, so as we move into the Nasdaq, let's move into the, so if we take a look at it, where do we have the fresher supplies? It's still pretty much higher on in terms of freshness. We have tested these areas right now. We've tested this lower supply. We've tested this supply. So really up closer to the 90.72 to the 92.06, and then you have the two gaps. The gap with the level right on top of it coming higher towards that 9400 area. That's really where on the Nasdaq the fresher areas are coming in. Okay, so you can see right here some overnight levels. So far it's made an overnight high, which is very close to yesterday's high of 86.95. Yesterday's high was 87.0750. You can see at the current moment it's hitting a bit of a 2-minute zone. Actually, it hit it before. Now it rallied up, and now it came back in again. So actually, it's already hit it twice. So in my eyes, that's kind of done already. But this close area on the overnight was the first area given by a little bit of a tool that we're using. And then also the second area I'm looking at is this 85.55 to 85.66. Again, these are overnight areas that are in between yesterday's high and low. So we know that those, a little bit in the middle of the range. And really coming down lower now, we're going to go into the 83.95s. We have 3 levels on top of each other on the 5-minute. That goes down all the way to the 83.36. So we do have 3 levels on top of each other should we make a new low. So it's kind of interesting when the S&P pushes up higher. It's gonna test its daily 50 and 200. When the NQ is going to come down, it's going to test its daily 50 on the downside. So the NQ is stronger than the S&P. And if we go take a look at the sectors, we can see that is very much the case, where we have something such as technology. Right? We still have some demand weekly wise coming in at this 66.40, 63.40, but you can see prices started to rally out of the overall, and now stocks such as Apple, you can see Apple creating a bit of a high up at 289 overnight. And the importance of this is you want to watch these if you are trained in Nasdaq, giving you some sort of guidance. If we're going to get extra strength coming in, or if one starts to sell off, it can cause some weakness too. So now you can see as well, Netflix is the other one, right? Netflix creating some sort of demand down below, had a very nice movement up to the upside. So you can see that will affect things too. And then for the S&P and the Dow, you want to pay attention to something such as, you have the financials, just like what we were looking at before, where the financials you can see is not as strong as tech, where we have a right. Fresher demand is still much lower in terms of the weekly. We did see a bit of a red candle coming into yesterday with all the banking stocks, except for Goldman Sachs being on the red side. So this is a sector, if you want to watch, if we start to have more weakness inside of those other markets, you can see you have this sector to watch out for coming into today. All right, let's get back. Then on the Qs, very similar to how we're looking at things in the Nasdaq, where we have the upper zone coming in at that 220.97 to 224, and then you have the gap area with the zone right up above coming up at the 229 to the 233. All right. Yeah, certain things we can't go over in here, but with the new ventures and all, we will be able to, and that will be covering a lot more things, such as what we're talking about before. You can see down below too the fresh area demand coming in 192.53, 190.97. Let's take a look at this Russell. So what's interesting to me with the Russell and the YM so far is we are still, so if we take a look at it, we've had this area for a while on the Russell, where it keeps hitting it, the 1244. So this is the small caps. We have dropped there twice already, as you can see. And we still have the upper zone coming in a little bit higher at that 1279 to 1300. So we do have these two, the upper area that's still the fresh zone at the moment. But let's take a look where we are right now, which is currently at 1185. So just slightly higher than where we closed yesterday. Again, all of these have overnight levels. So what I would typically do with an overnight level, you don't typically want to take, put all your eggs in one basket anyway. You don't want to take every index, but especially with the overnight level, you can try them, but I would say, pick and choose. If you're trying to short, try to pick the weaker one. If you're trying to, go long, if you pick the stronger one. And sometimes with the help of the stocks, once you get to the open and you start to see how things start to play out inside of the sector list, and then that can help you decide too, especially with these overnight type of areas. Because right now, this is what we have close to current price, which is overnight. Otherwise, you wait for the upper zones, which are the fresher zones. If that fits your trading style, then you wait for the upper fresher zones or lower fresher zones. But right now, where we're stuck right in between, what we have is overnight areas. So you can see right up above current price on the 30-minute, we have an overnight area coming in at 1219.60 to 1227.20. Down below, this area was tested once, but did have a nice strong move away. Again, it is overnight too as well. That's coming in at 1139.70 to 1131. So the only thing I would do with this one is also include the lower area. And again, like I said, doesn't fit your trading style. You don't need to get too involved with the overnight. But I would include the two of them and then see that on the demand side. Well, this area here, yeah, it can work for you. It just looks a little bit messy to me. A little bit of a mixture of overnight. This one, it looks like to me a little bit of reaction of the upper one. I mean, the general area could try to work for you. It looks like a bit of a reaction of the upper one. Okay, let's move into the YM. So the YM is sitting at 23. Actually, the YM, if you take a look at it, let's go and study this a little bit. So we're at 1191, 1182. So the Russell is actually a little bit stronger today. But the YM, oh, here we go. Like I said, this was given by the tool that we use, and now you can see prices have rallied out pretty good from there. The YM too, you can see we closed around that 23,394, and we are seeing, so YM is actually pretty decent at the current moment, 23,556. We are still way below, you can see this overall area. So this area is tested twice already, and but we are currently sitting below it. So the first level that it hits above current price is not going to be a fresh level, both in RTY and in YM. The overnight at the current moment is you can see 23,701 to 23,799. And the fresher overall demand on the 30-minute is 22,190, 22,066. Okay, let's move on to the bonds. All right, here we go with the bond. So this is the other part that's, I would say, slightly confusing too, as well as the news in general, is the bonds and the stock market are both moving up together. So is gold. So everything's kind of moving up together. So that makes it a little bit confusing on that end in terms of if anybody's looking at correlations and inverse correlations. So if we take a look at TY, so there was a question last time, and I put it in blue because it didn't get to the question last time. And so you can see it went, the overnight level, it formed a new demand underneath, and now we have continued to push up. It's trying to push above the highs. And so now this area too, the question was asked about this area, and the reason why that area was removed because it held down here for quite some time. This is not a market that's, if it's a market that's been on the weak side, I would take that area again, but you can see this market in general, because of the low interest rates, there's no reason to go into it again. That's why I didn't look at that area anymore after it hit the lower zone twice. And you can see now it does have a little bit of demand underneath. You can see right here, almost came down into the first one, 138.29, 138.25, and then a overnight at 138.13, 138.10. The U.S. looks like it's hitting into, and you can see too, it gapped up and it's remained up there on both of these markets. U.S., well, it looks like we already, so this area we've had for a little while. This is also, you can see an overnight level. And right now, it looks like to me, your first opposing is going to be this overnight area. So the first opposing is going to be your 180.25. And then you could, this also hit too, it looks like. I think this one looks like it hit. So I would say this one did take a hit. You can watch it again, but it does look like it did get hit. One at the 180, 179. The lower one is going to be a 5-minute zone on the overnight 178, 18, 178, 11. Okay. So, you know, you can see what's been happening the last couple of days. It is the 30-year is weaker than the 10-year and the 5-year and 2-year. So overall, they're all moving together, but it has been a little bit on the weaker side. All right, so that is on the bonds. So gold last week. So remember last week or last time, the smaller time frame had a little bit of issues, but the problem was in the bigger picture we weren't at a great place. We still aren't. I mean, gold still has the tendency, you know, we've had historically bad retail sales, probably the worst on record, and there's a lot of volatility. And usually gold benefits from you know, volatility as opposed to, you know, stocks and bonds, but gold likes volatility. Oh, this one looks like it hit too. Okay. Maybe I'm a little bit slow today. So again, the arrival, you do have some, a little bit of close demand. But some of you might have already had that level in from previous day. It was we didn't have it in our last session because this was newly created. Because it did go to make a new high from that time, then you can see now we are dropping from it. But perhaps some of you did see it and were able to capture it. Yeah, correct. And you can see if so what it is with gold. You know, right now if we're saying there's a little bit of a right now we're saying if there's a little bit of a break in things. So if things are going to break, things are going to get a little bit better. So then it becomes all into, well, you know, are they not going to create any more stimulus, right? So that's another thing. If they get bad again, then of course the FOMC will have to still rely on its balance sheet to boost economic activity. So then with that, then that gives gold another buying, you know, more firepower to go higher, right? So if you think of it that way, where if things do get bad, then the Fed has to come in and do something again, even though they don't want negative interest rates, but they're going to have to do something because that's what they're been doing. Then gold will have to will try to go higher again. But right now, if things are looking okay, maybe perhaps we can stop for now. Then we can start to see a little bit of a decline in gold. But it's been pretty much rallying because if you know, what do you want? Where do you want to put things? Do you want to put things in stocks and bonds? No, you want to put it in gold. So that's become, and it's the same thing with the dollar too at times, right? But that's what's adding to the fire right now. But if any of you did, some of you that were in other session, if you did take it, you can see right now, I mean, something like this where you're hitting that first opposing, you can try to get through it. So if you're really nervous and want to move it to break even, you can. You can see a lot of the demand below it has been tested. So you always want to make sure you are careful anytime it starts to, because this market's been strong, so I would still respect anything that starts to go below yesterday's low, then it could start to also bounce up quickly too. So, and you know, watch out, of course, the stock market in general. Right? Yeah, in this situation, like I said, I wouldn't, yeah, because overall it's been a very strong market, so I just wouldn't assume it's gonna, you know, just wipe out this whole low, even though it's not a great demand area. But remember, a lot of times with your profit zone is you want to take it at the easy places. You don't want to be competing. You know, you don't want to be competing with other people with the banks and institutions. So if we go back to the beginning where I said think like a bank and institution, where they would try to buy and sell, you don't, when you're taking actual profit, or at least partial or so, you want it in the easy areas, right? You almost want to think like you normally do. Like if you're thinking like you normally do, where you're buying as a novice or so, that's kind of like where you want to take your profit, because you want to get out there before you don't want to wait to get in to be competing with the banks and institutions to try to grab profit there, because a lot of times you're not gonna get it. You're not gonna get filled or so. All right, so let's move on. Okay, so copper, the thing about copper is, this is kind of what we were looking at the other day. Overall, copper, so you can see right here, it's still kind of right in the middle. We had this area up above. You really had to go in a little bit quicker in order to catch it. And we had this area down below, and you really had to stick it out and have a decent stop in order to capture that too. So remember, these markets, especially with the metal markets, they can be a little bit thinner. They can, have a tendency to just like what you're seeing here. But now we're in the middle, so I don't think it's a great place for copper to do anything really new now, because we are in the middle of this overall area. We'll go take a look at a 60-minute, but with copper, I mean, year to date, it is down 18%, basically because of the pandemic, because of China. It's more sensitive to like secular trends, like construction and stuff. So when the high growth economies get hit, they get hit too. So that's why you can see since 2011, it's been taking a bit of a hit. But if we start to see some, especially China, because that seems to be affected by China the most, especially once we start to see some good things starting to come out of China. So that's why it's starting to rally again a bit. You are seeing, for people who order things, it is starting to come out of there again. So that means they are starting to reduce things. I mean, of course, this year, that all that data that's coming out is going to be bad for everyone. I mean, everybody should just expect that for everything. However, they're expecting for next year, the IMF anyway, to be a very strong recovery. So in that case, copper should be able to also bounce back very quickly too as well. So it's all a matter right now of timing, when it comes to all of this. Now you can see a couple of demand zones I have down below. So this is the day session charts. So these are custom charts that are a little bit different than the other charts where it's time specific. So you would have to go in and see when copper opens. Copper is going to be slightly different than gold. And then you customize it. So if you want to take a look at these will show you some gaps and all. And you don't necessarily need to take the gaps, but what it'll help you do is it'll point your eye towards a certain area, right? So you can see right here on a pullback down, you can see it's going to be at 22.19. And the second level goes down to the 2.1798. So you have these two gaps on top of each other. And I checked them out in the overall regular session too, and they look fine. It would be nice if you could try to get out of this overall. It's been sitting at this supply, as you can see. Would be nice if you want to further rally for prices to get out of this area. But for right now, we are still stuck in between. And like I said, it's reliance on equities and China in general on copper. All right, and then the all famous, lovely old CL. CL. All right, let's go to CL. Again, we want to just all right, so again, you can see with CL, we are We came all the way back down past the lows, not quite to our next areas yet, so you still have those. So you still have these that's a little bit lower down, so don't forget that. All of this is, this 1884 down to this 1808. This whole area is still within. Remember, can oil go lower? Yeah, of course it can. Once it bounced back, it should be sharp. But the key is when is all this, not just when it's going to end, but when is this supply going to get used up too as well. So even though they cut enormously, but you don't know how much is sitting there and all those things. So can be a little bit tricky, but that whole area is sitting within this area, which is basically the lows inside of CL. For the, let me just see. So we did have, let's take a look here. So anything with these lower zones is, like I said, once we do start to see a pretty decent recovery, it is going to, I do believe it's going to be a pretty sharp bounce back. Right now, the weakness is still in, as you can see, can't even get above this. This area, you can see just barely tested once. That's coming in at 2289, 2401, and still dropping from our overall 240 zone up above. On the $5-minute, so this area didn't quite touch yet, so you could be something you pay attention to just for, like I said, we're very low down, but as long as we stay with low volatility, you can see this 2150, 2168. It is above yet overnight high and above yesterday's high. So you can watch out for that one. Just a little 5-minute area that you can watch out for. Also, definitely too, if you start to see some demands develop too, since given where we are, you can start to take some of that on the lower time frame too. If you see some, this is already tested, so that's why I didn't put it in. But you can definitely see if we start to form some new ones too as well, given where we are with the situation. Okay. Yeah, and then the rollover. Always pay attention to the rollover. 25. What are you looking at? 25. Let me see. This one too is also customized. 25 is all the way up here. Let me just take a look here. So one thing I will say, this market's been in a downtrend. You can still continue to sell. Yeah, it looks still fine. So with this one too, what you want to start to pay attention to is if we start to move up, any opposing demand that comes in the way too, then that's going to cut down on your profit margin. But yeah, you still have, that looks fine as well right now. Okay. Let us move to, so the dollar, let's go to the dollar. So we were talking about the dollar and the credit market. Before we do that, I did want, so if you're looking at CL, you want to pay attention to the XLE, right? You can see the XLE kind of like the index is kind of smack in the middle here. You can see where we are. Interesting here on the new low on the monthly, we still have more areas. So a little bit different than actual CL. You can see we still have another area below where it bounced off from, right? So you can pay attention to that too as well if you're watching it, and then watch the overall sector, how it's doing. See, you could take a look like right at the beginning, let it roll out for a little bit. If you see a lot of green start coming in, you could definitely start to look for some more demand zones. If it stays in the red, just be careful. Still, you can still be on the sell side. Yeah, so you can keep an eye out on it coming in today. Well, let's go into the dollar. All right, so with the dollar, there was a question about this area. So, two questions I'm going to address with this $1 example. Well, so we were talking about the dollar the other day, and we had coming from this area, we had some lower zones. So a couple of things, and I said the main thing you want to watch out for is if there's news about the credit market, we could definitely see a dollar rally from there. And so I didn't see the question about this zone. And yes, this was a zone, and I'm going to address the other question too. So two things why I left it as I didn't put it in as a zone for a definite area, but you can see it's a zone on the 60-minute, and then you can see how it worked out fine. But so there's two things. There's one, because you can see this area right here, and then another question was on arrival. So you can see right here we did form kind of this, right? So the whole thing is, do you want to take it like that? So probably a lot of you have that issue, right? You have an arrival, it's coming into an area, but then you have an arrival that's not that great, and this and that. So this is the whole thing. So you can see, right, as we start to come in, we're coming into the end of the day, right? End of the day, blah, 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 blah. So end of the day here. So this is kind of end of the day. Now, do I think that, say that this was like 9 o'clock in the morning, and we had a lot of dollar weakness, and things were continuing to move, and could this push price? Because look at where we are in general with it. We were in the middle. We were kind of in a range here. So could prices move to lower? Then yes. But you can see there's a little bit more end of the day, and prices stopped here. And where can prices turn? When you remember, we have New York, we have Asia, we have Europe. You got to think of it like this is where people, it's not like, okay, yeah, there's crazy of us who say, yeah, I'm going to trade New York, Asia, and Europe, right? Because that's what I am, so that's what I want to do. But for the most part, for the banks and institutions, they're going to come in, so if it's a banks and institution, they're going to come in, 7 o'clock or 8 o'clock in the morning here. If they're over there, they're going to start pre-market over there. So then for them, it's a new day. And when you come in as a new day, just like what we do every day, is you're going to look for your low risk, high probability trades, right? So it doesn't matter that we arrive like this, because there's still what they see is, okay, we are at an area that we can buy, and we are starting a new day, right? We are starting a new session. And so you can see this is into Asia, not a lot of volatility into Asia, but then coming into Europe, then we start to get more of a move, because then they say, well, Asia held, so Europe comes in and go, well, this is for me a better opportunity than it is on the other side. So then it starts to turn things, even though you didn't have a great arrival in New York, but it doesn't matter because you are into a different session. So if any time you can try to turn something for that reason, it can be because of a different session, a different market coming in, because it's a different set of traders coming in, and a different set of parameters start to come in for them. So, that's, if that helps you a little bit more on arrival, hopefully it does. But on the bigger look of things on the dollar, though, now what I'm seeing is, this is my little symmetrical triangle. What I'm seeing is this right now, where we've come down to the lows, we've come up to highs. We're meeting this area here, so you can see we're having a rejection off of that too as well. But you can see that how it's getting, right? So in this situation, what I believe is it just starts to get tighter and tighter until we start to break out from one side or the other. So that's kind of what it looks like to me at the moment with it. And like I said, today the news is very confusing, so it's not surprising that the dollar is doing this at the moment, in my eyes, and it does need to start to take that move in one side or the other, but could remain here for a little bit until then as well. So if I had to say, if any day is not the best for anything, it would be probably for the euro, because the euro is going to look like this too. So if you can picture that, where if you're trying to, let me try to go long, let me try to go short, let me try to go long, and maybe if you're doing very, very short term, you can probably do okay. But if you're trying to pick a direction on where you're going with it, it is going to be a very choppy situation, as you can see right now. That's what I always miss, which was okay in the beginning because it didn't matter. I was just trying to go for very short scalps. Not so much in the spot market, but in the for the futures. But then if you're trying to go for a little bit bigger target, you should look at things a little bit more on the bigger picture. So like I said, not a great time for this in general, but we'll just keep our bigger picture look of things, where I'm going to put this area here, even though it's not in a great spot as well, but it does look like I can still have some reaction to it. The 100, this is a Euro USD on the spot market, 100.79 to 1116. And then you can see up on top that still remains there. There are two little 15-minute levels inside of here. In the bigger look at things, though, it's not, none of it's really fresh when you take a look at it. We've been pulled back to either one, but there is two little, you can see here. And this is all Asia session. So I'm a little bit, where Asia is, so the currency market is going to trade, all around the clock, but of course the euro inside of Asia, the Asia is going to be more concentrated on the Aussie and the yen. The euro and the pound and the Swissy is going to be concentrated more during the European session, and then the Canadian dollar and the Mexican peso and of course the dollar itself is going to be more towards the U.S. session. So that's why I'm looking at this. I said, well, it can be okay, but given the scenario of it's not in a great place and it's not a great time, I'm going to be extra careful with it, right? All right, let's move on into AD. So AD, we had a couple of things going where, so with the Aussie dollar, they did have a pretty decent employment number overnight. It's, but right now I believe it's more affected by equities. So it can be, it will be affected by also it will be affected also by the overall what's going on with the overall stimulus and everything. But you can see, so we had a couple of demand zones. First one, you can see right up above, was a little bit too high up from our supply zone. So this is still falling from supply right now. The second one we did bounce from, but it had some supply. So we bounced from it, and then we came down a little bit lower. So we had that inside of here too as well. So from that, you can see right now it's mixed, because the equities, it did have the most implied volatility for the month, really last night. So it is starting to pick up, in, more implied volatility since then. But you can see too, I would say this is more geared towards equities at the moment. The reason why it probably is not rallying as much is because of the dollar. So it's a little bit of a mixture coming in with the overall Aussie. Let's see. Let's take a look at a 15-minute. So off of that same area, you can see that we have the 15-minute off of the 60-minute. So you do have these three on top of each other. And so that's coming in at 64.19, goes up to the 64.43. And the only thing I was looking at here is because we're getting a little bit closer to that 240 zone down below. And I just drew this here just in case we did drop and was able to move lower, then this could be one. But right now it's not. So that's just something to watch out for if that happens. Pound dollar. So pound, you can see it's a little bit, you can see right here. So we really tested, very high up into this area. And then now we're coming in testing this lower zone. So it's also getting very tight. What's interesting today is they brought up Brexit again. I mean, with all this coronavirus, kind of forgot about Brexit. And so they kind of brought that up again, saying that, hey, you got to still pay attention to it. It may come back into your focus. So I was like, okay. I noticed that with the news too, is they kind of put in focus whatever they want to put in focus. One day, like, you can have the Brexit, the most important thing there is. It could cause the biggest drop there is in the pound. And then all of a sudden the next year, it doesn't move it barely a couple of pips because it doesn't mean anything all of a sudden. Now all of a sudden they decide, well, maybe if the news gets slow with the virus and with Boris Johnson, let's try to bring up Brexit again. Let's do that. So I don't know. It's kind of, you gotta take it for what it's worth. I take the news kind of like how I take the inverse markets. I kind of take them the same. Like I look at them every day and I try to assess whether it's going to be meaningful to me or not. I don't just go in and say, well, it's definitely this, it's definitely that, because you definitely get burned on that. I've been burned on it before, so I know other people got to be burned on it. So over time, you just say, today I'm going to kick it out. Okay, but anyway, we really need to start to get this to move out, and I believe the dollar is affecting that too as well. So our zones are still higher up, and what else did I have with it? Yeah. Okay, so that's okay for today. And then for Canadian dollar, let's go into Canadian dollar on what did I have on Canadian dollar? All right, so Canadian dollar, let's go to Canadian dollar is actually falling off of a 60-minute zone. I totally forgot about it. Some of you, this is still a little bit rain. You can see where it is right now. It's hitting right back down to the bottom of this area, and it is bouncing back up a little bit higher, perhaps. I mean, I would say inside of this is going to be lower quality. I do have some zones from it. You can see what I did was I totally forgot about this area here where we've had, but that was like way before, and I totally forgot about it. And now if you want to still try to take it inside of there, may not be as good of a profit margin, because you can see now what it looks like. So you do have these 3 15-minute on top of each other. Following their emergency rate cut, Bank of Canada really has remained steady. They really want to, just like everybody else, avoid any negative interest rates. But the oil is the one that's been causing the weakness overall in general. So I think if oil still remains a bit weak, Canadian dollar can still also remain weak. And then, but once oil finds a little bit demand, this should also start to rally back up again. So like I said, a little bit less quality. This is already falling off of the 60-minute zone. You may have limited potential, but and these are the three 15-minute zones. And the other one, some of you are watching the Swiss franc. Swiss franc, it does look like the traders are net short for the first time since April 7. You could take that as meaning, if most are net short, you could be meaning that it's going to continue to go to the upside. So two things affect it. It's going to be the stock market and going to be the stock market and going to be the dollar, right? Two things that affect it. And you can see it's just hovering between our two zones too. So if anything I want to say about these couple of markets that are in between the zones, it's the dollar that's in between. So be careful, I would say, with these markets. You can go trade the other ones that aren't quite as congested as this right now. It should start to, move out, and therefore we should then start to get some good levels again. All right. All right, so on that, I do want to say again, if you like the session, press the like button. Don't forget to subscribe and turn on your notifications. And of course, always don't forget to email me if you want the first look at the new venture that's coming up. And great to be with all of you again, and hope to be with you again shortly. Have a great trading day.